Hey, what's up guys, it's the Average Joe here. In this video, part 4 of my Forex for Beginners series, I will be providing you with an in-depth analysis of the major candlestick formations which I trade. If you have not yet watched part 1, 2 and 3 of the series, I highly recommend you go and watch it, and the links for the videos will be in the description below. Also, if you enjoyed today's video, please remember to like and subscribe as it really helps out my channel. But anyways, let's get right in. Firstly, let's start off with a brief discussion about reading Japanese candlesticks. Japanese candlesticks communicate to the trader what is going on in the markets. The two types of Japanese candlesticks that I spoke about in the previous video were bullish and bearish candlesticks. Bearish candlesticks indicate that the market is moving downwards. You can identify bearish candlesticks firstly by their darker color, but also because they close lower than their opening. Bullish candlesticks indicate that the market is moving upwards. You can identify bullish candlesticks firstly by their light color, but also because their close is higher than their opening. But there is another way of classifying candlesticks, either as decision or indecision candles. Decision candles are also referred to as full body candles. They have no wicks or very small wicks. With decision candles, there is no fighting between bulls and bears in the market, and the market is clearly being moved in a certain direction. These decision candles are clear indications that the bulls or bears are in full control of the market. Indecision candles appear when the market is being fought over by the bulls and the bears. Indecision candles can be easily identified by their small bodies and large wicks. When you take indecision candles and place them next to each other, it provides confirmation of a potential reversal. As you can see, there are a whole range of indecision candles, and I will not be looking at each type in detail because I do not think it is necessary. Well, at least for the strategy which I will be showing you. I just want to draw your attention to two of the indecision candles, the hammer and the hanging man. Let's first speak about the hammer. A hammer has a small body and a long wick on the south side. The body is small in comparison to the wick. It is a bullish signal if it occurs after a significant downtrend. Let's see how these look on the chart. Hammers were present just after the market dipped, and after the hammer appeared, the market reversed directions and started rallying. Now let's look at the hanging man. A hanging man has a small body and a long wick on the north side. The body is small in comparison to the wick. It is a bearish signal if it occurs after a significant uptrend. Let's see how these look on the chart. Hanging men appeared just after the market rallied, and after the hanging man appeared, the market reversed directions and started dipping. What I wanted to highlight to you with these hammers and hanging men is that long wicks on the north or south side of the candles are strong indications of potential market reversals. Now let's speak about bullish and bearish candlestick formations. There are three major bullish and bearish candlestick formations which I trade, and I will be explaining them to you in order from which I personally feel are the easiest to recognize and up to the more difficult formations to recognize and trade. So the three bullish candlestick formations are a bullish engulfing candle, a morning star, and tweezer bottoms. These are all potential reversal points and indicate that the market will most likely rally after they form. These bullish candlestick formations provide you with the possible buy entry. The three bearish candlestick formations are a bearish engulfing candle, an evening star, and tweezer tops. These are all potential reversal points and indicate that the market will most likely dip after they form. These bearish candlestick formations provide you with a possible sell entry. If you combine decision candles with indecision candles, you get a candlestick formation that provides you with a trading signal. Firstly, let's look at bullish and bearish engulfing candles, which I personally feel are the easiest to recognize and trade. The bullish engulfing candle is a bullish potential market reversal. It is a candlestick formation where a bullish candle engulfs the previous bearish candle or candles after a downward price movement. The closing price of the bullish engulfing candle must be higher than the opening of the previous bearish candle or candles. Bullish engulfing candles provide you with a possible buy entry into the market. If we look at this example, the market was trending down. This is shown by the 4 consecutive bearish candles. We then had a bullish full body candle which engulfed the previous 2 candles. Let's see how they look on a chart. The market was in a long-term uptrend And as the market retraced, bullish engulfing candles appeared and the market continued in the up direction. The bearish engulfing candle is the opposite of a bullish engulfing candle. It is a bearish potential market reversal. They are candlestick formations where a bearish candle engulfs the previous bullish candle or candles after an upward price movement. The closing price of the bearish engulfing candle must be lower than the opening of the previous bullish candle or candles. Bearish engulfing candles provide you with a possible sell entry into the market. If we look at this example, the market was trending up. This is shown by the 4 consecutive bullish candles. We then had a bearish full body candle which engulfed the previous 2 candles. Let's see how they look on a chart. The market was in a long-term downtrend, and as the market retraces, bearish engulfing candles appeared and the market continued in the downward direction. Now let's look at morning stars and evening stars. Morning stars are bullish patterns which signify a potential market reversal. Morning stars provide you with a possible buy entry into the market. They come in many different forms and consist of at least 3 candlesticks. The ideal morning star takes 3 candles to make, but the more realistic morning star took 5 candles. How I recognize a morning star is by a downward price movement, followed by indecision, followed by upward price movement, essentially forming a U-shape. Let's think about this quickly. If we were watching the ideal morning star on a 1-hour chart, it would have taken 3 hours for the signal to appear. If we were watching the realistic morning star on a 1-hour chart, it would have taken 5 hours for the signal to appear. Let's look at what morning stars look like on a chart. As you can see on the chart, after the market dipped, a morning star which was either ideal or realistic appeared. It signified a potential reversal and the market rallied shortly afterwards. Now let's look at evening stars. Evening stars are bearish patterns which signify a potential market reversal. Evening stars provide you with a possible sell entry into the market. They come in many forms and consist of at least 3 candlesticks. The ideal evening star took 3 candles and the realistic evening star took 5 candles. How I recognize an evening star is by an upward price movement, followed by indecision, followed by a downward price movement, forming an upside down U-shape. Let's look at what evening stars look like on a chart. As you can see on the chart, after the market rallied, an evening star which was either ideal or realistic appeared. It signified a potential reversal and the market dipped shortly afterwards. Lastly, let's look at tweezer tops and tweezer bottoms. Tweezer top formations are a bearish potential reversal. They provide you with a possible sell entry into the market. Tweezer tops can consist of 2 or more candles. Bodies of the candles can be bullish, bearish, or both. At least 2 candles must have long, equal wicks on the north side of their bodies. The wick on the north side of the body must be at least 60% of the candle's total height. An ideal tweezer top formation will take 2 candlesticks. However, what you see in the market are tweezer tops which take several candlesticks to form. An important point to note is that the wicks have to be roughly of equal height. Let's look at what tweezer tops look like on a chart. What we see here is that after tweezer tops formed, the market started dipping. Now let's look at tweezer bottom formations. A tweezer bottom is a bullish potential reversal. They provide you with a possible buy entry into the market. Tweezer bottoms can consist of 2 or more candles, and the bodies can be bullish, bearish, or both. At least 2 candles must have long, equal wicks on the south side of their bodies. The wick on the south side of the body must be at least 60% of the candle's total height. An ideal tweezer bottom formation will take 2 candlesticks. However, what you see in the market are tweezer bottoms which take several candles to form. Once again, an important point to note is that the wicks have to be roughly of equal height. Let's look at what tweezer bottoms look like on a chart. What we see here is that after tweezer bottoms formed, the market started rallying. With all that said, does it mean that every time I see a bullish candlestick formation, I should buy, and every time I see a bearish candlestick formation, I should sell? The answer is no. These candlestick formations are only indications of potential market reversals. They only provide you with one reason to enter the market. And when I trade, I look for 4, ideally 5 reasons of why I should enter the markets. But I will speak about these specific reasons in a later video. Alright guys, that's going to do it for today's video. Once again, if you enjoyed the video, please remember to like and subscribe. The next video in the series will be out next Wednesday. And until then, stay safe and strive to be more than average.